Hello, everyone. Matt Clark, research analyst with Money and Markets with your Bull and the Bear podcast. I'm pleased to be joined by Chief Investment Strategist Adam Odell and Editor Charles Sizemore on today's podcast. Before I get started, I do want to talk up Adam Odell just a little bit. He's actually got a video out where he talks about how he used a certain trading strategy to retire at the age of 33. And I've said before, I'm not 33. And I wish I would have known how I could have retired at that age. But alas, Adam is sharing this with you. If you go to www.theinvestingsecret.com, he will certainly let you know all about that. So I would encourage you to do so. Also visit moneymarkets.com for free, safe, and profitable information we release out to you every day. Now, I'll start off with a bit of a story. I remember, my grandfather was an engineer. He was an engineer. Worked for Boeing for many, many years. He worked on nacelles and struts on large aircraft and was very, very good at his job. And one thing, as an engineer, he was very, very meticulous. And I remember going over to my grandparents' house all the time. And my grandfather would always use one of those old ledger books to balance his bank account. You have income in one column, you have expenses in another column, and then expenses are subtracted from income, and that gives you how much money you have or don't have left. But technology today has evolved considerably. It has kind of made the ledger obsolete, and what has made it obsolete is blockchain. Now, you equivalent blockchain with crypto, and that's always a common thing because, cryptocurrency uses blockchain as kind of an anchor. But in simple terms, blockchain is storing data in blocks that are chained together in chronological order. And it's become a new way of balancing large transactional accounts. And technology, along with the companies using it, are actually taking the market by storm. I took a look at the Amplified Transformational Data Sharing ETF. That's a mouthful. It trades on the New York Stock Exchange under BLOK. It's actually, it hit a low about $13 in March. The ETF has climbed as high as $41 a share, a 215% jump in January. So it shows that there is some, and this is an ETF that holds some of the biggest names in terms of fintech and blockchain. So what I want to do is I'm going to bring in Charles and Adam, and I want to talk about a couple of blockchain stocks. Now, these are stocks, these are companies that you've probably heard of, or you have used, or something like that. And you may not necessarily realize that they do have some sort of a tie back into blockchain. Now, the first company I want to talk about kind of made its name by providing point-of-sale hardware that can connect to a smartphone or a tablet, and it's really geared for small business users. So things like fair booths or farmers markets or things like that, they would have something you would just connect to your phone and you could take credit card payments. Made life very easy for small businesses. And then now that technology has kind of been adopted to larger businesses, more specifically larger retail outlets that actually use their point of sale machines as bases instead of just the small device that they start out with. Now, this company's sales were about $552 million back in 2013. But they've jumped to $4.7 billion in 2019, and their trailing 12-month sales as of right now, $7.6 billion. So you can see that they have a massive trajectory of sales growth. The stock for this company soared off of its March 2020 lows, and it jumped nearly 500% off those March lows. So the stock has moved forward. The sales are high. The company here is Square Incorporated, trades on the New York Stock Exchange under the ticker SQ. First, I'll throw it to Charles Sizemore, and give me your thoughts on Square. This is kind of an interesting company that had an interesting beginning and has massively grown in just about 7 years.
You forgot taco trucks. You mentioned fairs and farmers markets, but you forgot the taco truck. That's an important early clientele.
I did forget taco trucks, yes, or just
fault,
food trucks in general.
Just food trucks in general. I say this because I believe the first time I used a Square app was actually at a taco truck in Dallas, and it was delicious. So there's that. But no, I've actually been really impressed with Square's growth. I remember when it came out, it was really just kind of a novelty. And you're right, it was geared towards really small businesses or that start on your kitchen table. I mean, it was a very, very modest start. And they've really adapted and grown. I mean, now major retailers accept Square. And it's very much a millennial play as well. Millennials and Gen Z, they really like paying on their phone. It's funny. I'm not that old, but for me, I'm used to just swiping a credit card. I mean, that's what I grew up doing, and for me, that's just really convenient. But people, 10 years younger than me, just didn't really, they came of age in the era of mobile payments, and so for them, it's just as easy to, put their phone on it. So I think I think there are good long-term trends supporting this stock. Going on that crypto and blockchain angle, Square also was, I can't really say an early adopter, but as far as sort of quasi mainstream, companies go, and not just dodgy back alley stuff, Square was one of the first to allow you to hold your balances in cryptocurrency and conduct transactions in it in a not too cost prohibitive manner. One of the biggest problems with crypto is like you just get absolutely out in transaction fees. Square's not as bad on that stuff. So I think there's a lot of really good trends supporting it. I think Square is going to be around for a long time. I'm a little bit concerned on the price. The stock really has just exploded higher. And at the end of the day, they do have a lot of competition from every other Tom, Dick, and Harry here. So I would say I'm going to call it a buy, but it's a weak buy for me based on valuation.
Okay, and Chief Investment Strategist Adam Odell joins us. Your thoughts on Square? This is an interesting company, and Charles is right. It's taken off sales-wise. Its stock has taken off, but I mean, to say that its stock has taken off is not necessarily a novelty anymore because there's tons of them that have done that since their March lows. So, but give me your thoughts on Square.
Yeah, I'm actually going to mirror Charles's tone and say I'm going to call it a buy. There's obviously a good measure of hesitation in that, maybe a hold your nose for the valuation thing. Looking at our 6-factor green zone stock rating model, of the 3 stocks we're going to talk about today, Square rates the highest, and it rates kind of in the neutral range at 49, which basically means that half the stocks on the market are better rated and half are worse rated. But it's really kind of a tale of two cities, or a Dr. Jekyll and Mr. Hyde type of thing. I mean, Square gets rated the lowest on size. It has a 1 rating out of 100, and that simply means that it's a rather large company at just over $100 billion. Recently, obviously, didn't start like that as you kind of introduced. Its next lowest rating is value, which kind of Charles hinted at. The price of the stock right now, the valuation is pretty awful. So I think the PE ratio is in the 300s, and that gives it a 7 out of 100 value score. So if you're looking to solely invest in value stocks or in small cap stocks, this is not the company for you. On the other hand, it gets a 95 out of 100 on momentum because of its recent run up in the past year or so, and it gets a 99 on growth. So to me, I mean, it's a little bit worrisome sometimes when you see a really good momentum score, but you see a bad growth score, because that just shows you that it's maybe just a fad, or the price actions run up and it's going to be a shorter term phenomenon. I mean, I'm a huge proponent and believer and successful with the momentum strategy, but momentum itself only lasts for about 1 to 12 months. So if you're really looking to hold stocks beyond that, you need more than just momentum in a stock. But Square, as you alluded to, in its sales growth, it gets a 99 out of 100 on its growth factor score. So it really does have the growth backing up that momentum. So for me, Square is a buy. I'd much rather kind of buy it on a dip. I mean, it's pretty far stretched from its 200-day moving average. So technically, I think you can kind of wait for a pullback over the next, say, 3 to 6 months and try to get in sub $200 per share. And I think that would be a better buy. But ultimately, I mean, Square has disrupted the kind of traditional credit card, Visa, MasterCard, Amex, stalwarts. And as long as it can continue to innovate and kind of be at the leading edge of that pack now that it is with the big boys, I think that it's a great bet for the long run.
And, I like Square. I really do. I like the company. I like what it does. I like how it's disrupted things. I don't like its numbers. I don't like its ratios right now. I don't like its return ons are solid. It's debt as it's debt, and that's one thing. I'm just really hesitant. So I'm kind of with you guys. I really would want to buy this, but I think it would be a short term, and I would really wait for this price to fall. I wouldn't buy it today. I think right now it's about 227, 228, give or take. I would want to get this at under 200 because I think it's met some resistance. I think if it comes back down, it's going to go back up to that resistance point again and maybe even break through it. So I think buying it at around 200, even less, is great. That is the perfect time to get in to a company like Square. So all three of us are buys, a little hesitant on it, but we're all buys on it. Now moving on to the next company. This is one of the world's most well-known digital payments company. And I say digital payment because if I gave away what it really, really did, everyone would know what it was in a heartbeat. It operates transactional processing networks that enable authorization, clearing, and settlement of payments. Basically, it's a one-stop shop to take money, process money, and then settle accounts afterwards. Now, the company has actually been making investments in blockchain since about 2016. It partnered with a blockchain infrastructure company actually called Chain to help companies make secure B2B payments using blockchain. And these are large-scale B2B payments. These aren't just $5, $10 transactions. These are $1,000, $10,000, $100,000 transactions between businesses that we're using blockchain to try to trace and use in chronological order. It allows customers to, the company we're talking about here allows its customers to convert crypto into cash or use crypto as a reward payment. Although at $34,000 for a Bitcoin, that's an awfully big reward for what you get, which would be one coin. Now, this company's stock grew as much as 62% off its March lows. Earlier in January, it's pared back a little bit, but it's still up 53% from its coronavirus crash low. And the company here is Visa Incorporated, trades on the New York Stock Exchange under the ticker V. Now, in terms of blockchain implementation, Visa is actually one of those pioneers. They got in before the big Bitcoin run up in 2017. They kind of recognized the trend early and got in before 2017 when blockchain became big and Bitcoin went up to around 20,000, I think, from 900. So Charles, does being an early disruptor in terms of blockchain make Visa an attractive company for you?
Not necessarily. Let me go backwards for a minute. Most people look at Visa and they view it like it's a bank. They view it as if it's a bank, and that's really it could not be further from the truth. Visa is not a bank. They do not carry debts. Well, they carry debts, but it's not like a bank where they're issuing credit. It's a payment system. And that's always made it attractive because while banks had to set aside reserves for losses and had to accept credit risk and whatnot, Visa doesn't care. If everybody in the world defaults on their Visa card payments, that's the problem of the banks issuing the cards. It's not Visa's problem necessarily. Only in the sense that there would be less swiping in the future, and that would be a problem. But in terms of actual credit risk, Visa really doesn't deal with that. It's just a payment system. So it's been in a very attractive place for years because while credit cards are old technology in the developed world, when you look at the developing world, the emerging markets, a lot of these people have never even had bank accounts before. They've had very simple, they grew up in a very simple economy, and as they have been integrated into the modern world, one of the first things they've gotten is a credit card, or a debit card. Yeah, either way, just a Visa branded card, right?
Right.
And so that was one of the biggest trends of the last, call it 20 years. Now that is of course old news. The bigger news now is of course the transition to blockchain related payments. It is interesting that Visa is an early pioneer there because you don't really hear that much when you hear about crypto or blockchain related stocks. Visa is usually not in the conversation, but it should be.
Exactly.
Yeah. So in terms of what do I think of Visa right now, it's going to be similar to Square. I do feel like it's an innovative company. It's ubiquitous. It's all over, and it still is a growth company because there are still hundreds and hundreds and hundreds of millions of people that have never had a bank account or never had a credit card or debit card before. And that in this transition, Visa is going to be part of that story. I think it's an interesting long-term play. Management has proven to be innovative. I think it has everything going for it. It is just a little bit on the expensive side. So I'm pretty neutral on it, honestly.
Okay. Adam, your thoughts. Does being an early disruptor in terms of blockchain, being an early investor in blockchain, and recognizing blockchain early, does it make Visa any more attractive to you?
I think that factor, first of all, it's not surprising. It's such a large company with such resources. They're not idiots. They've got managers and leaders that do read what on the cutting edge of things. Even if they're not developing the technology themselves, they have the resources to put whole teams to research it and to acquire companies that that deal in that. So I'm not surprised that they are adopting blockchain, one of the earlier ones. That said, I think it's simply, and that kind of ensures its survival. I mean, what comes to mind is Eastman Kodak back in the 1970s was selling film for film cameras. And I don't know if many people know this, but they actually, developed some of the early technology or figured out the early technology for digital cameras, but they kept it under wraps because they thought it would kill their film business. When really what they ought to have done in hindsight is develop that technology themselves and push it forward rather than try to sweep it under the rug or hide it. And then obviously how Eastman Kodak's done now. But so I think that Visa being willing to adopt and adapt with blockchain technology allows it to stay around as a major player. Does it move the needle for investors getting into Visa stock? I mean, is that going to basically make it the next hot stock or make it a market-beating stock? Not necessarily. I think that it's kind of one of those things that we're like, televisions. The technology is always changing. There's new chips. There's new screen displays, but at the end of the day, those don't necessarily make the makers of TVs, wildly more profitable. It's just they kind of keep up with the times, keep up with the technology. So I think in a way, once blockchain becomes a lot more mainstream, the card companies like Visa, MasterCard, Amex, and any of the other digital payment ones, I mean, it's going to be one of those things where you have to use it, but using it won't necessarily mean that you're going to be delivering investors market-beating returns. You still have to do something else. So for me, Visa is a very neutral play. It rates 35 out of 100 on our green zone rating model, so it's even below average. It's worse than Square. If you look at how the Visa's done over the past 52 weeks versus the S&P 500, it's trailed by about 17%. So for me, I mean, if you want to buy kind of a steady Eddie, buy the S&P 500. Don't necessarily buy a Visa. It's not going to move the needle on your portfolio.
Yeah, I'm neutral here as well. I'm more excited about Square just because I like its adaptable platform. Visa, again, it's going to be around for a long time. It's not going to go anywhere. Long term, maybe a buy and hold if that's what your portfolio recommends. Then Visa may not be all that bad. But in terms of just buying it just for blockchain purposes, I'm pretty neutral. I'm kind of with you guys. Not really there. But not really against it either. So just kind of him-haw. Now, the final company here on the list is a company that really hasn't taken off lately as much as its peers have. It has a cloud software division that's specific to health, financial services, and the Internet of Things. The company's annual sales have actually been in consistent decline since 2011. They'd reached about $106.9 billion in 2011. Their trailing 12-month sales as of today, $75 billion. So they've had a pretty solid fall from grace on their ledger or their blockchain. Now, in terms of blockchain, the company has created a suite of blockchain services back in 2017 when Bitcoin did make its last run. Now, unlike Visa, this company actually got in as the trend for Bitcoin was hot, not beforehand as Visa did in 2016. Now, that suite does cater to big companies now like Walmart, who actually uses this company's blockchain to trace its food supply chain, which is very interesting. Its stock's only up about 42% off of its March 2020 lows. The company here is International Business Machines Corporation, or as you better know them, IBM, trades on the New York Stock Exchange under the ticker IBM. This is a company here, Charles, that has, big tech has really taken off, has done wonders, especially since March. IBM's just not there. Is it a concern?
I hate IBM. I'll be honest. I hate that. I hate that company. I wouldn't touch it with a 10-foot pole. I'll tell you why. It is. The emerging blockchain business, and I believe they even had their own currency. The Lumen, I believe, was theirs. Yes. They had, that's great. Like, that's a growth business potentially. That's something that could do really well for them. I think that segment of their business is quite promising. But you look at their legacy business, and it's just this anchor pulling the company down. Their traditional business services and data services, that's just dead. Amazon killed it with AWS. So it used to be that pretty much every corporate IT department in the world had IBM hardware, had IBM consultants telling them how to run the hardware. It was just IBM ran the world's back offices, right? Well, I saw an interview with, I believe it was Larry Ellison of Oracle a couple of years ago, and they asked him like, "Well, so who are your competitors here, there?" And they asked him about IBM, and he was kind of in a good mood, and all of a sudden he got real kind of almost apologetic. He's like, "Yeah, I'll tell you, it's been a long time since we really ran into IBM as a competitor. They're just kind of not on the radar right now." And that's it. Yeah, IBM was way too slow to embrace the cloud, and now they're a late comer to that business. At this point, Amazon.com and Amazon, just Amazon and Microsoft pretty well own that market with Google, Alphabet. Number three. There's just, after that it drops off. There's just nobody. Like those three companies pretty well dominate back office computing now, and IBM's just not in the running anymore. And so while IBM does have this really promising thing going with the blockchain, it's not enough right now. Unless they spin it off as a separate business, then all of a sudden I might be interested again. But right now you just have this legacy business that's just this huge anchor around the company's neck. So I would stay away.
Now, IBM started off with big computers, and I mean big NASA-like computers. That's where they got their start. That's the anchor that you're talking about, because they're still kind of living in that time frame. And now that PCs, personal computers are so wide-ranging in terms of who can make them. There's so many companies out there that can, because PC hardware isn't really proprietary.
It's not PCs; it's the servers. I mean,
servers,
Amazon,
all that. Yeah, it's not.
Nobody's going to spend the money to buy a bunch of IBM hardware and then buy the employees that know how to use it when they can just outsource all of that to AWS, have Amazon run all of their stuff remotely, and pay a fraction of what they were paying before. So, I mean, IBM's business is dead, and they've tried to adapt and copy AWS.
But they've been so slow at that.
They're late to the party. I mean, they were too late. At this point, new relationships have already been formed. Companies have either signed up with Amazon or Microsoft. And it's one of those deals where success breeds success. If I'm, an enterprise buyer and I'm looking at my options, I'm just going to buy. I'm going to do what everybody else did. It's ironic. There was an expression from like 30 years ago that nobody ever got fired for buying IBM. And that was, the idea was, if you're like the corporate IT department, no one's going to blame you if you buy IBM hardware and something doesn't go right, because everybody buys IBM, right? Well, now the exact opposite is true. You probably would get fired for buying IBM because everybody is buying Amazon or Microsoft services. No one's going to get fired for buying AWS. No one's going to get fired for buying Microsoft's Azure. So that's it. I mean, IBM is they're relegated to this distant competitor, and it's really hard to ever catch up. It's not a turnaround play I'd want to bet on.
Adam, they have their own blockchain suite of services. They are serving large companies like Walmart, things like that. But do you agree? Has the traditional business service for IBM just been an anchor and drug this company down?
Well, I'll be a contrarian a bit on this and play off of Charles's characterization. It's a turnaround play that I'm tempted to bet on. That being said, I mean, its numbers are kind of much different than the other two stocks we've talked about. Its growth score is rather low at 24. Not surprising. The company's been around for more than 100 years. It's fully developed, and it's not keeping up with the times. Its momentum score is 23. I mean, that's one of the things, as a pure chartist or as a technical analyst looking at the price chart, what you see is that IBM stock topped out in like early 2013 when a lot of the other stocks were in the market were accelerating through 2013. And it has just gone on this slow grind lower year after year for the past 7 years. You can really buy IBM stock at the same price now that you could have bought it in 2010. And in March, you could have bought it for the same price you could have bought it in March of 2009. So basically, as if the bull market of the past 10 or 11 years did not even happen for IBM. That said, its highest scores are in value. It rates 77 out of 100 on value. So its PDE, its price to book, price to sales metrics are all really much more favorable than the market and its industry group. If you're a believer that the value strategy is coming back, which I think a lot of people are starting to warm to that idea. I mean, value as a strategy or as a factor has been out of favor and out of vogue and underperformed for quite a while. But if you believe that in the past 6 months or so, it started to show signs of life, if you believe in that ahead, I think IBM could be a good value play. It also rates 82 on quality, so its margins are pretty good. I mean, it's a legacy business. It's not really at the cutting edge of anything. It is falling behind, but it's one of those companies that I don't think it's going to, I think 10 years from now, Charles is still going to have to be, putting up with the idea of IBM and talking about IBM. I don't think it's going to go anywhere. So if nothing else, if value comes back into favor and there's a rotation of money back into stocks that have better valuations, and based on the price action, the chart pattern of IBM looks like it's kind of forming a pretty significant bottom here. I would wait for a catalyst, meaning I would wait for a quarterly earnings report that really surprises to the upside and puts some short-term momentum into the stock and breaks above that kind of downward sloping channel of the last 7 years. So I kind of have IBM on my watch list as a potential turnaround buy, but I'd be a little bit patient right now because I think it could just keep going lower.
Yeah, I'm not with IBM at all right now. I'm concerned that it hasn't moved. I'm concerned that it hasn't matched its tech peers in terms of its momentum. Are they going to have a breakout quarter? This one isn't going to be it. Their quarterly report comes out, I think today, actually, which is the day we're recording this. And I don't think there's going to be a surprise. I don't think it's going to be a surprise that it's going to catch anyone off guard. I think you're going to have to wait 2, 3, maybe even a year before that actually happens. So, I can see Adam's point where this could be a nice play as a nice rebound, a company that's found a bottom and is now going to find a skyrocketing way upward. I just don't see it yet, and until I do, this is a pass for me. When I start to see the momentum start to pick up a little bit, and I see a confirmed trend, then I think IBM could be a potential. But right now, I'm with Charles. I'm kind of a stay away. Maybe watch it down the road. It's going to be around for a long time. I mean, IBM stock used to be the stock to own. I mean, that was the stock you handed down to your kids. Here's my share of IBM, or my 10 shares of IBM, and that you bequeathed that in your will. I mean, that was how important IBM stock was. It's not there now, and hopefully this company adapts and does something maybe more blockbuster in terms of blockchain, and gets away from its traditional business model that just really hasn't worked. But until that happens, I think it's going to be a slow slog for IBM for the time being. So to kind of recap, Square. We talked about that. All three of us were buys on Square. A little kind of hesitant buys on Square, but buys. For Visa, we were all pretty neutral on Visa, and for IBM, kind of a either stay away or wait and see. But probably not the time to buy right now. If I kind of encapsulated all three of our opinions there correctly. So that was our take on these particular blockchain stocks. Again, make sure that you are going to moneymarkets.com each and every day. We do provide safe and sound, profitable information to help you build up your portfolio. You'll have content there from Adam Odell, our chief investment strategist, editor Charles Sizemore, who's editor of Green Zone Fortunes, myself, who's research analyst for Money Markets, plus much more. Sign up for our free e-letter as well. You can get that just by putting in your email address. And also, I'd be remiss if I didn't tell you, if you want to find out how Adam Odell retired at the age of 33, and just look at him, he retired at 33. Just look, he's got that look of retirement, of where just kind of, I'll just do what I got to do and do what I want. And he does that because he's got this. He developed this trading strategy that helped him do it, and he reveals it. Just go to theinvestingsecret.com, and we'll try to put that website down on the YouTube page here, on the YouTube video. But yeah, theinvestingsecret.com, and he will show you how he did that. It's called his Millionaire Masterclass, and it is definitely worth just checking it out and seeing what it's all about. So until next time, we'll have more next week. We'll have more the marijuana market update. Stay tuned for our week ahead that comes out on Sunday, and then we'll have much more with the bull and the bear. So for editor Charles Sizemore, chief investment strategist Adam Odell, I'm research analyst Matt Clark. And until next time, everyone, safe trading.